Wow, what another incredible day of trading in terms of continuation, taking off from where we left off yesterday in terms of our trade management. We've had some really great continuations in terms of the Boeing Airlines trade and also our Walgreens Boots and Alliance trade. This is really going to be the platform for this Thursday afternoon market recap. We also have a really nice and genuine setup on Apple, which I'm very much excited about. I will talk about that in great detail over the weekend. But outside of these three first up shares, which I first alluded to, the other big mover today has been Caterpillar. Caterpillar today was absolutely hammered from the open, down $4.40. This is on the back of a really big fundamental announcement by Caterpillar in terms of its forward-looking earnings into the year 2016. Right now, in terms of forecasting, they've actually wrote off 5% revenue or forecasting of what they're actually going to earn in 2016. 5% written off. That is a big forward-looking estimate. In terms of revenue, on top of that, the 2015 revenue was written down, I think, just over 1%. And it has been the fourth consecutive year that sales have been dropping for Caterpillar. This is a really big fundamental event, or at least an announcement. On top of that, it's also an incredibly big technical issue as well, because we've been paying very close attention to Caterpillar since it's made this some form of at least a lower high or two consecutive lower highs. We've been in what we call a bear market for Caterpillar. I should bring up the right color for you. A big red arrow down. The reason why is because we are making consecutive lower highs, as you can see, month over month, or really year over year since the beginning of 2014, or at least midway through 2014. We've also been establishing continued lower lows. This is really the definition in the textbook of a downward trend. This is why I'm so excited in terms of potentially a trend reversal on all three of the US equity markets, because right now we are shaping out, this is a little bit off on a tangent, but right now we're sort of in this phase right here as to whether we're going to set up a legitimate lower high, or if we're in this phase over here where we are potentially going to set up another lower high in terms of the slope of hope rally. But getting back to Caterpillar, at least, if you have a look at where we closed, or at least where we opened today's trading session, it was down here at $65.80 a share. But prior to that, we had our bearish entry here at $67.92. I had no idea whatsoever that this announcement was formally going to be made today. But if you are in this trade, congratulations. Look at the volume spike as well. Very much bearish news. This could even be, again, a breakaway or a continuation gap right now. And if I had to give you a target, this is where it gets very exciting. The next level of support, a genuine area of support, comes in here about $55.20. Right now, once again, we're trading at $65 or $65.80. So to put a target down here, $55.20, that's another $10 at least on a $65 stock, which we have potentially to fall in Caterpillar. This is taking us back all the way to the year 2009, 2010. If I said this at the beginning of the year that Caterpillar would be trading at these lows, a lot of people wouldn't believe me. I probably wouldn't even believe myself, but really exciting times. We've broken, again, the last line of support as it stands in the year 2011. And if you wanted to place a potentially very much intelligent trade that didn't come out all too well, it would make perfect sense to have a continuation type of entry. If you didn't get in at the open on today's candle, about $64.20, I'm going to go over this trade setup in great detail over the weekend in Pro, much like Apple. But really the beginning, or what I really wanted to speak about as at this Thursday afternoon market recap, was the continuation in our Boeing Airlines trade. This has been an absolutely phenomenal trade. As it stands yesterday, personally I was up 30% on my original put options, which we got into at 133.24. I don't want to speak about percentage terms, but that figure has actually increased obviously today as we sold off another $1.92. A really great trade entry setup. And in terms of management, this is really what I wanted to speak about. Right now, we are very much close to our first target, 126.02. We closed today's session at 129.75. So we are within about 70 cents, give or take a couple of pennies, of our first target. All of our analysis suggests, we've just got that 100 crossing the 200, right below that shooting star type of candle. On top of that, we're seeing price pull away from the declining exponential moving averages. These are all ticking the boxes of a bearish move. In terms of overbought and oversold, you can see the bearish crosses once again, which we are seeing. Short term, we are moving into an oversold state. on the RSI, but it's looking phenomenally bearish. I mean, it's just an exceptionally bearish trade, which I'm very, very happy and confident about. I rated it an A over the weekend. ADX is turning up. CCI is below the negative 100 line. It's ticking all of the boxes. Volume expanding on the downside move, which we expect once we saw the rejection and the early reversal signals off from our red box. Just a really, really great type of trade setup. At the moment, though, in terms of the individual candlestick, this is what we call somewhat of a hammer type of candle. Hammer type of candle near support. So this is somewhat of a bullish candlestick. If I was to be, again, completely transparent and open, this is some form technically of a bullish candlestick, but it's not enough to shake me out of this position. I understand that, look, Boeing Airlines can move back up, but ultimately we are and should see the ultimate wave back down to these lower lows. So we could go through a little bit of market noise. The markets themselves had somewhat of a nice little push up higher from the lows about intraday, and it closed out relatively strong. So it wouldn't surprise me to see a white candlestick on Boeing Airlines. I had a few people actually get into this a little bit higher up, closer to 134. They've emailed in and have done phenomenally well also. It's really where you want to place your stop. Yesterday I said 137.95. You could even move it down to about 135.26, just above this particular candlestick right here. I wouldn't encourage you to place it above today's candle unless you're happy to get stopped out and lock in profits. And when I say stopped out, that of course means locking in profits below our original entry here. So the decision is yours on Boeing Airlines. Outside of that, Walgreens Boots and Alliance has been another incredible trade. Depending on whether you got in at 88.88 or 87.72, here we are trading at 85.75. So we're about $2 away from our second entry and $3 away from our initial entry. Another great little ROI on this Walgreens Boots and Alliance trade. I was speaking about this type of candlestick pattern right here, this type of continuational holding pattern. It does have a name, but it isn't. In terms of the pattern structure itself, it's not enough for me to go out and call it what I was about to, what I'm imagining it to be, but it is some form of a continuational type of holding pattern. This is exceptionally bearish, very similar to the Boeing Airlines trade and very similar to a lot of other individual trades which we are following. It's just looking like a really great trade. Personally, I keep my stop up here, about 89.64. I wouldn't change it until I see Friday's candle. If we get another bearish candle, I'd then move it down and start locking in profit. But again, just open up the trade analysis a little bit for a little bit of market noise and market volatility, which we are expecting to continue as we carve out this intermediate bottom on the three equity markets. Outside of that, any big moves? Goldman Sachs has started to break down. I'm not sure if it hit our target. Personally, I was not in this. I went through this in great detail over the weekend again, saying, look, in terms of risk and reward, if I was to go through Goldman Sachs and compare it to that of Boeing Airlines and also Walgreens Boots and Alliance, I'd take these two trades, the Boeing Airlines and the Walgreens, over the Goldman Sachs trade anyway. Goldman Sachs has actually played out as we would have expected. It just wasn't a really great trade in terms of risk and reward, and because of that, we stayed clear of it. But, however, very close to our target here at 174.62. Chevron. Really, really nice structure on Chevron. I am absolutely loving this trade. Have a look at this coil setting up. Volatility starting to become suppressed, right? For about a month now, it's looking incredibly, incredibly tight. When this constricts price even tighter, it is going to be an absolute doozy of a trade. So, I mean, as I sort of think about how am I going to exit out of Boeing Airlines and also Walgreens Boots and Alliance, I'm also thinking about how am I going to enter into Chevron at the same time. Again, I'll go over that over the weekend with you. Outside of that, though, I mean, Caterpillar was the biggest mover, obviously, down very, very much close to $4.50 today, $4.40. You've got Baidu again, which is looking somewhat weak. Now, I've had a few people email in about Baidu, and I was trying to say to them, or to suggest to them, that the coil breakdown, or at least the band squeeze, which we were waiting for, really broke down because we didn't actually see it eventuate. What we wanted to see was a couple more days of sideways movement up around this 144, 145 area before we started to see directional movement. As you can see with the Bollinger Bands, they didn't continue the tighten. They actually started to expand as we saw the movement down into the lower Bollinger Band. This is what we call the false Bollinger Band break. It's where we see the beginnings of a Bollinger Band squeeze, but we don't see the follow through in terms of the structure. So this is a little bit frustrating to buy. If you are in it, still a nice looking trade. I mean, depending on where you got into it, I just have a tight stop on this trade, and I'd be more or less willing to get out of it and just just forget about Baidu if in fact we don't break below these levels down here, about 128, 125 because it really looks as though it's sort of teetering on the edge of support, and this false Bollinger Band sort of squeeze has me a little bit concerned as to a potential bounce in terms of price for Baidu as well. I just wanted to bring that to your attention. Amazon as well is sort of, it's really been fizzling out. It's something which we've been following. Right now, as I look at it, it really looks as though we are trying to set up some form of a bull flag. But at the same time, markets are weak, and I don't have much confidence in this trade based on this particular candlestick right here. This exhaustion gap, well, this is the exhaustion gap right here. And then we have a couple of breakaway gaps through here, and also an island reversal type of terminal pattern, which I've just circled on my screen as well. So it really looks as though Amazon itself is coming back up to a resistance level, whether it's at 540 or up as high as about 580, until we start to see it roll over and potentially move back down to about 440 as an initial target. So I'm not really tempted whatsoever to either leg into Amazon. It's more so watching from the sidelines and just seeing what it does over the coming days. But it's really been a really great week in terms of trade structure, trade management, and just trade execution. It's really been a really, really great week, and I'm excited about some of these other individual trades which are really setting up as I go through this analysis. Again, just to, I guess, surmise what I've walked through, market is still bearish. We are seeing that swing lower, but we do have what we call a very nice type of hammer type of candlestick at support. So I mean, it's the first candlestick suggesting that we are, or this first wave at least, could be somewhat finishing. At the same time, though, we are in bearish trades, and we just need to think about stops on those trades, or at least management in terms of where do we get out to lock in profit, and also where are our targets meant to be placed. Outside of that, that is the Thursday afternoon market recap. I don't think, I really don't have anything much else to really speak about in terms of very, very poignant news. So I will call it an afternoon. Have a fantastic evening. I will be back with you over the weekend. I don't think I will do a Friday afternoon market recap unless something really big happens in the markets. But pay attention to Caterpillar. It's looking exceptionally weak. And if we break below that level about 64.20, I mean, who knows what's going to happen. Right into your trade analysis in terms of targets. $55 a share. 55.20 I think the level was. Very, very nice target. Actually, it's not 55.20. That's because I just said 64.20. 56.80. A really nice entry, a really nice target, pardon me. So, I mean, pay attention to this. Really good type of trade setup. Farewell, everybody. Thanks a lot for watching this analysis video. I'll see you over the weekend in that pro analysis class. All the best. Goodbye.